Welcome back. Real estate takes on a new role under President Trump. The president's economic policies aimed at jump-starting growth could change the landscape of commercial and residential real estate. Joining us right now is the chairman and founder of Equity Group Investments. That is Sam Zell. Sam, great to see you. Thanks so much for joining us.
My pleasure.
So you're one of the biggest real estate investors in the world, obviously. What do you think happens to real estate under President Trump? Characterize his policies right now and the impact that you're expecting on real estate.
Well, I don't really think that President Trump is going to make any significant changes, or his policies are going to make any significant changes in the real estate world. I think that, right now everybody is kind of confusing real estate and infrastructure and kind of mixing them together. I think his intent in the infrastructure space will make a very significant difference. And it really will depend upon his ability to change the way in which the permitting process gets done. You know, some great philosopher, I think it was one of the Supreme Court justices, said, justice delayed is justice denied. And we see that in almost every infrastructure question. And the question is, can they change the process, create deadlines, enforce deadlines, so that you don't end up with 20-year periods in order to get a bridge fixed?
Yeah, I think you make a really good point, because the truth is that the president is focused on infrastructure. That's really where we're going to see the impact. But broadly speaking, when you talk about tax reform, when you look at the rollback in regulations, making permitting easier, doesn't that impact real estate as well as the broader economy? Maybe the real question is the broader economy. Do you expect an impact?
I think there's a lot of potential impact from President Trump's policies. I think real estate is probably a lesser arena than other areas. I mean, what President Trump can do to reverse a lot of the policies of the last 8 years that led to, no growth. I think that's his challenge, that's his opportunity.
Yeah.
Sam, interest rates are going up. The Fed is accelerating the pace this year. Does that have any knock-on effects on the commercial real estate market or residential?
Well, I mean, there's no question that if you think about real estate as an income vehicle, and therefore it's always opposed to the risk-free rate of return, interest rates going up are going to have some impact. On the other hand, I would say to you that over the last 8 years, where we've had extraordinarily low interest rates, we've also had an extraordinarily low period of urgency. At 1%, what you didn't do yesterday, you can do tomorrow. And so that affects the way people make decisions. And I have not felt that low interest rates have been beneficial or they've been so low as to not be beneficial to the economy.
So do you think this commercial boom that we saw last year has legs? Are we going to see more building and prices continue to rise?
While you see, by the way, malls struggling, retailers struggling in commercial real estate, assess it for us.
Well, I think that you have to look at the real estate business at asset class by asset class. The malls are suffering because we're going through a very disruptive period, and more online is taking away retail sales. There isn't much, frankly, that I can see on the horizon that's likely to change that. And therefore, strip centers are probably going to be okay. The very high-end malls will continue to be the new definition of downtown, and everything else, I think, will suffer accordingly. Outside of that, we've got a pretty significant boom going on right now in terms of new construction. Multifamily, we're building more multifamily in 2017 than we have probably since the turn of the century. We're building more hotels. than we built in 10 or 15 years. So the real estate industry as a whole, I think, is pretty healthy. The risk, frankly, is oversupply. You know, the real estate industry is not exactly famous for discipline. And I can't imagine why this time would be any different.
Which area is most in danger of oversupply? Is it hotels?
Yeah, probably. I mean, the multifamily oversupply situation is pretty significant, but so is the demand side. So, I mean, you know, for 20 years we built 1 million single-family homes every year and sold them. At the depths of this Great Recession, I think single-family homes dropped to 350,000.
Wow.
I think today we're probably close to 550. So there's still a pretty significant gap in the single-family market that is not being recovered, and obviously a lot of it has to do with starter homes and how young people have chosen or not chosen to participate in the real estate market going forward.
Sam,